Hi everyone! Last week the stock market faced the biggest correction. The main US stock indices dropped by 3 or 5%, notching the largest decline since the coronavirus outbreak. The current week is likely to be quite volatile, so watch our video review to learn about the latest events on Wall Street. Let's start with the Dow Jones. The index has been moving down for the third week in a row. Despite the market's attempts to stabilize and resume moderate growth, the index did not even reach the low of 35,500 points. Instead, the Dow dropped by 3% to 34,360. As a result, it shed 1,080 points. It's quite a significant decrease. The reason for this is expectations of monetary policy tightening by the Fed. The FOMC meeting will take place tomorrow. Many investors fear that the regulator could hike rates 4 or even 5 times this year, so they prefer sitting on the sidelines now, waiting for the final results. Analysts expect the index to fluctuate in the narrow range of 34,000 to 34,800. The S&P500 index also incurred huge losses last week. It opened the week at a low of 4,590 and eventually lost 4%, sliding to 4,410 points. Apart from concerns over monetary policy tightening, the index is volatile due to the earnings session. Many large companies and top banks disappointed investors with their quarterly results. Their financial outlook for the year also looked quite pessimistic. This week, about 100 companies included in the index will unveil their earnings reports. This is why investors remain cautious. Judging by the fundamental factors, the index is unlikely to advance during this week. Analysts believe that under the best-case scenario, it will be able to rise to 4,500. Otherwise, it may drop to 4,350. NASDAQ Composite showed the worst results last week. The heavy tech index decreased by 5%, losing 720 points. It's now hovering at 13,860. Besides, shares of big tech companies continue to slide down. Even Netflix and Zoom reported losses. Perhaps the earnings reports and outlooks of such giants as Apple, Microsoft and Visa will revive optimism. In any case, the weekly forecast for the index is quite modest. Analysts predict fluctuations in the range of 13,500 to 14,300 points. As seen, the US market is experiencing a strong correction in anticipation of the Fed meeting. Excluding the weekly results, the indices nosedived considerably. On Monday, the S&P500 index lost about 10%, while NASDAQ saw an even bigger decline. Despite the biggest correction that occurred this January, on the same day both indices rebound from the lows, adding gains. Today, the stock market is stabilizing, but investors are apprehensive. This week, market participants will finally find out the future plans of the Fed on monetary policy. The results of its first meeting this year will be announced on Wednesday evening. Traders are of course expecting Jerome Powell's speech, which should clarify the further actions of the regulator. Fed Chair's comments may either soothe the market or trigger a new wave of sell-off. Powell will also share plans on curbing rising inflation. Apart from the FOMC meeting, there are some other important events. For instance, the US will publish its GDP data and inflation report for December, which will surely have an impact on the market sentiment. So the current week is rich in events, and this is why traders should brace for high volatility. We will continue to closely monitor the market situation and share the latest news with you. Have a profitable week and do not forget to subscribe to our channel. See you back soon.